This is All India Radio. In the program Spotlight, now we bring you a discussion on record GDP growth in first quarter. The participants are A.K. Bhattacharya, economic analyst, and Shishir Sinha, journalist.
Mr. Bhattacharya, we have 5 key data which have come out during last 24 hours. The first one was, of course, GDP growth for April-June period. That was 20.1%. Then we had core sector data showing a growth of 9.4% in the month of July. Then we have the fiscal deficit data showing 21.3% of budget estimate during April-July period. Today we have PMI manufacturing, some disappointment there at 52.3, and the GST collection of rupees 1.12 lakh crore in the month of August. Let me begin with the GDP number. When we say 20.1%, is it purely a base effect, or do you also see some other green shoots, some other factors contributing in this kind of higher growth number?
20.1% growth rate that you have seen in April-June 2021, it is certainly an offshoot of a low base effect in the sense that in April-June 2020, the economy had contracted by 24.4%. There is no doubt about it. But it is also a fact that this 20.1% could have been lower, but for the weaker impact of the second wave on the economy in the first quarter. If earlier it was feared that probably this growth rate would come at around 17-18%. Actually, quite a few analyst agencies had actually even predicted that the growth rate in the first quarter of 2021-22 would be close to 18%. The fact that it has come at 20.1% is a kind of a relief in my view, but we should not draw any comfort from this number in terms of recovery as such, because it is, after all, a statistical recovery. If you compare it on a sequential basis, in other words, compare it with the January to March growth figure, there is actually decline in the size in the GDP by 17%. So in other words, the size of the economy is actually not growing even on a sequential basis. In the first quarter of 2021, which is January to March, the size of the economy was bigger than what it is in the second quarter of 2021. There are various ways of looking at it. It is not something that you need to be unhappy about. As I said, it's a matter of relief.
The one debate which is going on is the comparison between pre-COVID, that is 2019-20, 2019-2020, and the first quarter of 2021-2022. How do you see this debate? And if I talk from a student of economics point of view, what should they derive from this?
The April-June 2019 economy GDP growth had given the quarterly size of the economy in real terms and at constant prices at around 35.67 trillion rupees or 35.67 lakh crore rupees. Now that figure actually was in April-June 2019. Now in April-June 2020, that figure dropped to 27 lakh crore rupees because of the pandemic. Now from that 27 lakh crore rupees in April-June 2020, it has now moved up to 32.38 lakh crore rupees. Now this is certainly an increase. They said that it is a matter of relief that the economy is regaining its earlier size, but the margin of increase is not enough, not big enough to take it beyond the size of the economy of 2 years ago, which was in April-June 2019. So this is a debate between the growth rate, which is at times on a year-on-year basis, it becomes a statistical thing, but it is also a debate on what is the size of the economy. Have you regained the size that you had before the pandemic hit the Indian economy? Now this is important to recognize it, because the size of the economy will tell you a lot about the economy's ability to create jobs, sustain demand, sustain investment in the coming quarters.
Mr. Bhattacharya, when we talk about achieving the pre-COVID growth rate, expectation is that we will be able to do so only in the next fiscal, that is FY 22-23. What is your assessment on that?
My calculations suggest that if in the current year, the real economic growth rate is around 9.5%, which is what the Reserve Bank of India is estimating, I would say that we would have just crossed the size of the economy that used to prevail in pre-pandemic era. So that's an important landmark. We can start the year 2022-23 on a clean slate, having weathered the impact of the pandemic and start the growth process in real terms all over again. But there is another big challenge that we are faced with, which is the consumption challenge. Private consumption in the economy, which is captured in the form of private final consumption expenditure, has actually been growing, but is not growing that fast. As you would know, that private consumption accounts for 55% of India's total GDP, and this private consumption should grow much faster than it has grown so far. And private consumption has been an issue. Even the government consumption has been an issue. Private consumption, which is the largest chunk in India's GDP, should revive fast. And for that, you need sustained demand growth. And unless there is a demand increase, unless the employment situation gets better, the consumption growth may be difficult to achieve. And that is very, very critical. And of course, as they say, the investment rate also needs to get better. Right now, the investment rate is around 27% in current account, current crisis level. So that needs to also get better to sustain the growth going forward from next year.
When we are talking about dependence on the pent-up demand, how do you see the pent-up demand being in the economy during the festival season? Because now we are almost on the verge of beginning of new festival season. How this will impact the overall consumption?
Two issues will be very, very important. Number one would be if we can maintain the current pace of vaccination, which has been a matter of great relief and achievement, I would say. Only yesterday we had vaccination rate of more than 1 crore doses were administered. If you can maintain this kind of a pace, the vaccination will be much more widespread, and this will help us prevent possible virulent spread of the third wave of the COVID-19 pandemic. And if that can be managed, I would say the full benefits of the festival season can be realized. So remember that the festival season brings with it not just commodity sale, but also a good part of the boom festival time comes from services, or what are called contact services, which are still not anywhere near where they ought to be or where they were before the pandemic hit the Indian economy. So therefore, the festival season will definitely have the potential of reviving demand in the economy, but provided the vaccination rate goes apace like this, and second, the third wave's impact is contained through greater pace of vaccination and giving a boost to more consumption of not just goods, but also services that are so far not realized its inherent potential.
You also mentioned about the investment cycle or the rate of investment. When we see the fiscal deficit number for April-July period, we find that in the month of July, the expenditure was higher, but for the first 3 months, the expenditure was not so high, and especially the capital expenditure. So what will be your suggestion how to increase the expenditure? Because 21.3% fiscal deficit, 9-year low, it may be a good news from the economist point of view, but from a general economy point of view, it may not be a good thing, especially when we are looking for more and more expenditure.
At a time when the private sector is not investing much, at a time when private sector's capacity utilization level is also around 70%, not encouraging it to invest more in the economy, the government should step in. The government had provided for a decent increase in its capital expenditure outlay. Pace of increase in capital expenditure has not matched that was seen last year at the same time, but still I would say it is still above 30%. The steps should be taken by which, through better planning, more investment can take place in creating productive assets. And as I said, since the private sector is not forthcoming with fresh investments, it would be good for the government to speed up its infrastructure pipeline investments. It has got an ambitious agenda. Almost 111 lakh crore of investment in infrastructure has been projected. But still, I would say the steps should be taken by which, through better planning, more investment can take place in creating productive assets.
Mr. Bhattacharya, the one issue is rate of inflation. We are seeing some kind of moderation, but at the same time, RBI has upped the inflation projection for the year as a whole. We are also seeing below normal or lower end of normal monsoon. So how do you factor these things along with the crude prices, which will have some impact on the inflation? So what kind of inflation projection you have?
The Reserve Bank of India's projection for the full year inflation, retail inflation, which is what they measure very closely for monetary policy purposes, has been actually being brought down for the full year from 5.7% to 5.1%. And also the latest inflation data for the month of July shows that the inflation has moderated somewhat. Even wholesale price index, although it is in double digit, has also come down marginally to around 11%. The danger of inflation and inflationary expectations getting into the retail price, retail inflation are very real. To have a wholesale price inflation staying above 10% for 2-3 months together, and that inflation might impact adversely the retail prices also. So therefore, it is important for the monetary policy makers to take necessary note of this development. The accommodative stance probably will have to be looked afresh. The monetary policy committee members are already aware of the need for some sort of a rate adjustment, may not be with the policy repo rate, but with the reverse repo rate, and how that can be raised so that the effective interest rate in the economy gets slightly higher up, so that at the time of changing or getting out of the accommodative stance of the monetary policy, the transition is smooth and easy. So therefore, inflation is something that should worry policymakers, both in the government as well as in the Reserve Bank of India. But an exit from easy money policy should be gradual and graded so that there are no shocks to the economy.
And there's one particular issue which is having some kind of concern, we may call it as, but government is not saying because of the fundamental, and that is the tapering by the Federal Reserve. How do you see this particular issue?
I don't think it should have any immediate or sudden impact. Number one, there is an advance timetable that is indicated by the government. And second, it is the government's, India's forex reserve position is fairly strong. So if there is any tapering that happens, but I don't see the scope for much of a tantrum as we saw in 2013 post Fed's decision to pare down its bond purchase program.
Yesterday when we were talking with Chief Economic Advisor, he said that final growth number for the year as a whole will be close to what we have projected in economic survey as well as in the budget. If I remember correctly, in the economic survey it was 11%, but in the budget it was lesser than that number. So can we expect double digit for this current fiscal, or we will have 9.5 or 9.6 kind of number is the RBI had estimated?
If we achieve double digit real growth, I would be very happy. But given the next few quarters and the base effect will be working in a reverse direction in the coming 2-3 quarters, and given the fears of a third wave and keeping in mind the kind of vaccination pace that is going on right now, I would say a 9.5% growth rate for the current year is a fair estimate. But if it crosses 9.5% and goes beyond the 10% level or 11% level, we all should be happy. But in terms of estimate and forecast, I would say a 9.5% growth forecast will still make India as among the fastest growing major economy in the world currently.
Mr. Bhattacharya, thank you very much for sharing your insight on the economic numbers.
Thank you.
You were listening to a discussion on record GDP growth in first quarter. The participants were A.K. Bhattacharya, economic analyst, and Shishir Sinha, journalist. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may email your opinion about this program at airnsdtalks@gmail.com.